Welcome to Trading Nation. I'm Courtney Reagan. Check this chart of the ratio between stocks and gold. The S&P to gold ratio has risen to its highest level in 13 years. So in other words, stocks are outperforming gold by a long shot. That's a stat courtesy of our Trading Nation friend, Charlie Fialio of Pension Partners. But we want to get to the gold trade. Frank Capillari is with Instinet. Gina Sanchez is with Chantico Global. Frank, what do you make of these charts? I know you're a technician. What do you think here?
Hey, Courtney, gold's been a tough one. And the reason is that, it's held its own recently over the last few years. The problem is that we've been at these points before, and each time we failed. So I think there's no real rush to buy gold because think about how many other asset classes have been doing well, outperforming, even making new highs. So I think we have to expand the discussion. We're talking about gold. And I think one way to do that is turning to the base metals. And here we have the S&P base metals ETF XME. Now, again, this also has had trouble recently, right? At the same time, we see an identifiable pattern, it's the inverse head and shoulders pattern, that is possibly waiting in the wings to break out. Now, again, I won't jump out and buy this just yet because it hasn't proven it once it gets through the supply. We'd like to see bullish patterns form before they can actually be taken advantage of. And we can take this even more broader step and look at the DBC, it's a commodities ETF, it's very general. Now, DBC has exposure to mostly energy, about 60%, but together with precious metals and base, it's about 20% of that as well. And we can see here, it doesn't look like much, but this is a 2-year breakout. Energy has really helped this, but at the same time, we can see there's a very large air pocket of supply that can be taken advantage of. So I guess when we talk about gold, we have to realize there are other areas that actually have been performing better. So I wouldn't just focus right on that.
That is true. Other areas that have been performing better. But what do you think, Gina? Could we possibly be poised for a breakout, even if it's temporary with, say, volatility based on what happens or doesn't out of North Korea?
Okay, let me put this in a big picture context. The direction for gold is ultimately down. When you think about what tends to drive gold, it tends to be the direction of interest rates, the direction of the dollar, and the direction of volatility. Now, ultimately, we see interest rates higher. Ultimately, we see the dollar stronger. And ultimately, volatility should be more or less contained. Now, it's that last one that has been giving us some opportunities in gold. As volatility has been surging back into the markets, we've seen gold holding its own, as Frank said. However, the gold pattern since 2014 has largely looked like a trading pattern. It's been in a range. So gold isn't an investment right now. We think it's a trade. And when it's this high in the trading pattern, you're really better off selling it than buying it.
Very interesting stuff, Gina. I get that, and it does seem like you're a bit on the same page. Frank says maybe don't get in yet, but look for the opportunity. You're telling us gold is a trade because the long-term trend is down. Thanks for breaking it down for us here today, Frank and Gina, and thank you all for joining us and watching Trading Nation. I'm Courtney Reagan, and we'll see you next time.